Good morning and welcome to Thursday morning's market wrap. I'm Greg McKenna. It's 9:28 Sydney time. I'm a little bit later than normal, but been a little bit busy with all the moves overnight. And it was a good night between the quarter. The Dow was up 1.47%. Nasdaq rose 2.2%. S&P was up 1.9%. That's a good, solid last day of trade for the end of the quarter, which was really just a terrible quarter. You know, we had the Dow down 7.6% in September. S&P lost 7%. Nasdaq fell 7.4%. The ASX market, which rallied yesterday as well, up around 2%. It was still down 8% for the quarter to follow June's 7% fall. You know, that's really not the best performance you've ever seen. But, you know, even though I'm overall longer term bearish, the fact that the markets in the September quarter held the August low has to give some kind of confidence to maybe not the bulls, but to those who think that, you know, maybe they can sneak back into the market. You know, yes, last night we saw Glencore up another, I think 14% or something like that. It hasn't regained the whole 30%, but it's pretty close now. Copper rallied 8 cents a pound, 4%. Oil's back in the 45s. Gold's back down at 11.14. You know, these could be end of quarter moves and it could all get washed away with a raft of weaker than expected PMIs, you know, over the course of today, starting with China, of course. We've got the Tenkan in Japan. We've got the Japanese PMI. We've got the granddaddy of PMIs in the ISM tonight in the US, plus market PMIs for the US and for Europe and for, you know, the Americas and all through that region. But manufacturing is, and I know I've said this recently, manufacturing is just a small part of the economy. Obviously, we focus on it because a lot of the companies on markets and on indexes are in some way related to manufacturing, but it's a service-based economy in the developed world. So my sense is that you've got this real bifurcation between the service sector, consumers, and what you've got in the rest of the economy. That's one of the things that Miles Udland, one of my colleagues at Business Insider, has picked up on. And he's written a piece. If you go to the Money and Markets tab on the Business Insider Australia website, you will find, where is his piece? Miles, here we go. It's called, so if you find it by Miles, and you'll find it. So it says, the strength of the US economy is revealed in this massive divergence. Now, why am I talking about this when we are in a trading podcast or vodcast or whatever you want to call these things? It's because there's a real bifurcation in where the economy is. That means we could get another big non-farm payrolls, even though another piece that Miles has written today says that the US manufacturing is in recession. So, you know, there's a lot of tension here. And obviously, what you'd argue is that if we do see another big non-farm payrolls, the Fed's going to have to tighten. And, you know, there's a lot of people who think December is a likely tightening point. Of course, I thought they should have done it in September. They didn't. That means, for me, they should do it in October, but they won't because there won't be enough data points before that release. So December looks the most likely, although Goldman Sachs and many others think that think that it's not until next year now. So one thing that's worth talking about is the market price action. So of course, 30th of September, you know, yesterday I said that the Aussie market was going to rally. It rallied. The day before I said it was going to fall. It fell. You know, big deal. That's good from a trading point of view. But, you know, if you're trying to think about how these things work out, I just want to highlight what is, for me, the most important chart in the markets at the moment. So if you go to my website, my chart of the day, which should be up by now, you will see I've got a long-term monthly chart of the S&P 500. Now, if we have a look at this, all right, so what we can see, here we are. So what we've got now, it's a bit scratchy, probably on your screen, but where I've got this circled here, that is where my bull bear indicator, what I call my Jimmy R, is turned bearish. Now, James Rawback, is a bit of a trading guru, old fella, been around forever. I heard him interviewed on Michael Covell's excellent podcast once a few years back. And he said, look, if you've just got the simplest, if you've only got Saturday mornings that you can, allocate as time to be part of the market, well, then the simplest thing you could do is just put a 15 and a 15 and 30 week moving average together, and that would tell you whether you should be long or short. Now, ever since that time, I've been using that. And even though I was rhetorically bearish for much of the last sort of 12 months or so on stocks, that indicator stopped me from, being preemptively bearish. That indicator crossed over a while back. And of course, we've seen the market fall. Now, if we have a look at the big blue line at the bottom here, that is the 2014 low, which is just below the August 2015 low. That's the next big level. And the way I'd characterize it is to say that, we are in a topping pattern until that level breaks. Once that level breaks, which I believe it will, then we are in an outright bear market. But unless or until that level breaks, then all we've got realistically is we've simply got a market that is in a topping pattern. And topping patterns can take a long time. UBS put out a report last night, I think it was, saying that they think the high's in. Well, I'm pretty sure the high's in. But as we've seen with gold and as we've seen with any of these kind of markets, the Shanghai recently, when I was saying, at 5,000 or writing, I don't think I'd started these things when it was back up there. In the 4700s, 4800s, I was saying I thought 5,000 would be it. Of course, the high was 51 something or other. It went down, it went up, and went down, and went up. That was a lot shorter time because we were on a daily chart and things were moving much faster. This is the monthly chart or a weekly chart, and so we've got a much longer time frame. So we could see the S&P bounce up and down. We could see a decent rally off these August lows in October. Depends on earnings season. There's lots and lots and lots of different things. Overall, I think that level gives way. But I'm trading two different time frames at the moment. One is my long-term stuff. My super money is in cash. I'm waiting for lower levels to go back into the market and then get into the rally of 2017. But shorter term, I'm just trading the market in front of me. As it stands today, locally, you'll probably see another rally on the ASX. China's closed because it's got the Golden Week holidays, but that doesn't mean we're not going to get the Chinese data, and the PMI is going to be very interesting today in China. The Australian PMI is out. It was a really good number. It shows that the low Aussie dollar, and it's at 70 cents today, the low Aussie dollar is really doing its job. That's what's supposed to happen. That's why we've been 25 years without a recession. So the Aussie's doing its job. Australian growth may not be as weak as many think. It's easy to be bearish on Australia. The IMF put out a report last night which was bearish. I've written it up at Business Insider. But sometimes, the underlying data, the NAB business conditions, this manufacturing PMI, we know services PMI is not too bad. The economy's doing okay. We've just got this big mining hole that we have to get over. And of course, we need to navigate the coming pullback in housing and the settlement crisis that could happen as people try to settle on apartments that, for investment purposes, that the banks won't fund. That's going to be really interesting. Anyway, it's going to be a huge day today, lots of data. Tomorrow's an even bigger day. We've got retail sales in Australia, and then we've got non-farms tomorrow night. So the next, 36 hours or so is going to be really fun. Currencies haven't really done anything. They've been bouncing up and down in a range, nothing much there. But the fact that the CAD's off, almost a big figure, Aussie's up, Euro's down, British pound's down, yen's kind of becalmed around 120. There's a little bit of a risk on feel to it, but we'll wait and see what happens with the Chinese data. Anything better than 47 today, you'll see a rally in stocks and a rally in the Aussie. So let's hope we see that just for something different. Anyway, I'm Greg McKenna. Today's Thursday. I'll be back tomorrow morning with Friday's morning report. Don't forget you can find me on Twitter at Gregory McKenna, on Business Insider, of course, where I write, and on my own website, gregmckenna.com.au. Have a great day. Bye for now.